Hey, what's happening, everybody? Tim from Alpha Wolf Trading coming at you with another CEO interview. This is a very interesting one. I have not spoken with Brian in probably over a year, but I think that's when I met him about a year ago. And the company is Jericho Energy Ventures. The ticker symbol is JROOF. And Brian Williams,
Son.
right? Williamson.
Yes.
Okay, Brian Williamson, CEO, is here. Brian, I want to thank you very much for coming in to do the interview, first off. And
Thanks for
I think
having me,
you
Tim.
have a fantastic story to share. When I met you, I'll never forget this. It was, like I said, a little over a year ago, and you're an energy company at the time, and it was an oil company primarily.
Mhm.
And I remember you telling me that at the conference, you felt like a leper because nobody wanted to talk to you, right?
Yeah.
Because you were tied to oil. Boy, how things change in a year's time. You had just picked up an interest in a hydrogen technology play, and that was kind of, you really kind of were just getting started, right?
Mhm.
So what I'd like you to do is I'd like you to give me a little bit of background about you and how you've got where you are here with Jericho today. And then we'll get into the nuts and bolts of what Jericho is today.
Sure. And thanks for having us, Tim. Good to see you again. And so my background is 25 years plus now of energy. So I have owned, operated, managed, invested, and done just about everything there is to do in energy. My formal training is actually as an accountant, finance guy, and a legal background. So I'm accountant, CPA, Esquire by training, and ended up in the oil world because of my clients when I was a consultant at my very first job at Anderson, some 25 years ago. And so it's been down the energy path ever since for me, from there. And, so seen a lot, seen low oil prices, seen high oil prices, seen high energy prices, seen several revolutions in the energy business. I've seen the renewable space take hold and seen that come of age now. So, that's sort of the experience that led me to Jericho and the chance to run Jericho and build Jericho into what we think is a pretty special energy company.
Okay, so let's talk about what Jericho has done. I mean, you were originally, like I said, you had just picked up
Mhm.
a hydrogen asset, but you've done quite a bit more since you and I first met, right?
Mhm.
And I just want to go down. So here's your current portfolio, right?
Mhm.
So let's briefly touch on a little bit of each of these and why you've gotten involved there.
Sure. So when you think about, the energy transition, a couple of things sort of led us to this world. When we talked, a little over a year ago, when I said that, we feel like a leper, there was a material shift in the investor community. Oil and gas and energy traditionally was completely out of favor. There was zero appetite and interest from an investor standpoint, with a lot of that coming from the biggest investors, from Larry Fink to the pension funds to the endowments, all standing and telling everyone that we were deploying capital in ESG. And you can see it, right? So if you look at the last 12 months, you have $100 billion of capital now focused on ESG. And so as a company with energy roots, we needed to put those roots to better use and spread our wings. And when we did a fairly deep dive, exhaustive study of where we thought we could deliver real value for our shareholders, we felt hydrogen was the place to be. Hydrogen is a part of the energy portfolio today. It's not some whimsical, far off, no new fuel. Hydrogen is energy, right? Hydrocarbon, hydrogen, hydrogen and carbon make up everything that is generally the energy complex that is oil and gas. And so we felt like we understood the molecule really well. We understood what it took to deliver energy really well and to deliver it on a global scale, right? Because one of the things that tends to happen is novel technologies fail because they only work in very controlled environments, in labs in California or small marketplaces, not on a global structure. And so when we looked at hydrogen, we felt like it had the ability to be a part of the energy mix as we go forward, and a big part of it. And so in doing it, what we also looked at was, where do people go first for adoption? So you tend to see commercial industrial adoption way ahead of consumer adoption, right? And you know, in our mind, that was how you want to dive into the spaces on the commercial industrial end. And our first acquisition was a 100% acquisition of Hydrogen Technologies. And you'll see that on the mix there. And, you know, at the time, our vision was always the same, which was to build out the whole value chain. But we felt like starting with the end use case made a lot of sense, so that the market could see where hydrogen can play a pivotal role. And so there's a couple key things that don't get talked about much, because we don't see our factories and our industrial facilities every day, right? We see our planes, our trains, and our automobiles, but Hydrogen Technologies focuses on a zero emission hydrogen fuel boiler system focused on the commercial industrial market, which represents 28%, almost 30% of our greenhouse gas emissions. We just don't see it, Tim. It sits over the hill, you know, beyond, and it's all predicated on the use of steam. So steam is a fairly horizontal energy source, pretty much used in every industry, and far more than we realize today. So what we think is, what our thinking was, is that steam was going to be a big part of this. And so we moved in to purchase Hydrogen Technologies with their commercial ready technology. And we spent the last year sort of cleaning up the intellectual property, filing second generation patents, filing those to move them into a global position. And we are now moving into commercial deployment. We have taken that technology and now have 5 site studies underway with global organizations. You know,
in different industries, right?
In different industries, right? So, you know, food and beverage, big part of what we're looking at. Industrial services, another big part. But I think what we have come to realize is that, you know, the emissions profile of the industrial community is way understated. It's pretty pervasive, and as it relates to steam, it's the biggest part of it. So for us, we feel like this is a phenomenal place to begin our journey in the hydrogen world, because we're driving use, right? If I can convert each of the customers that we're doing site studies for, right, it's not for one boiler, right? At the end of the day, that site study can lead to the application of multiple boilers in each site, but ultimately these are companies that could use 20, 30, 100 boilers, right? So the ability to have that explosive growth is sort of the focal point of it. And, you know, lots of places to get hydrogen, just not a lot of applications for Hydrogen Technologies yet. So for us, phenomenal place to start, and pretty excited about everything we've done there. And since then, we have focused on adding things that we believe are real pain points in the hydrogen value chain, right? So in all energy, you need to produce it, you need to store it, you need to transport it, and you need to use it. So, you know, that is the value chain. And to us, it's being a part of really key pieces of that value chain where there is significant cost opportunity, cost savings opportunity, step changes in that opportunity. And so we've added, you know, positions in hydrogen, H2U, super critical to go along with Hydrogen Technologies. And we'll keep building that, right? So when it's all said and done, Tim, we will have this portfolio of hydrogen opportunities, hydrogen-oriented companies that we believe are best in breed, best in class. And we think that those things will be a huge part of the next energy transition.
So, you know, I think it's pretty interesting because when you think about or hear about renewable energy, or you don't hear a whole lot of talk about hydrogen, right? You hear the solar, you hear wind farms, right? I mean, that's really what you hear the most of, right? You don't hear a whole lot about hydrogen, and it's always been at least from my understanding, is it's not cost effective. It's expensive, right? Even when they talk about, the 1,000,000-mile battery for electric vehicles, right? They talk about the fact that, hydrogen is a better solution, but hydrogen is too costly for the vehicles, right? As you've got battery technology that's coming down and lengthening and all of that stuff. So it's interesting to me that is where you focused, right? That's kind of what makes you really unique to me. I mean, there are hydrogen company players out there. I know there's like Plug Power and some of these other guys who have never made money, right? If that doesn't help the case for hydrogen companies, because they've never made money, right? So that is where it gets a little sticky, right? So even Toyota, I think at one time was looking at hydrogen vehicles, right? And I think they still are. It was cost prohibitive. So the way that you are going about it, though, is very different, right? So with the steam technology and the boilers. Now, when we just caught up last week to schedule this, you had mentioned, being able to store energy and deliver that energy when it's needed, right? Do you remember that?
I do, and I think that is the value proposition that is not well understood about hydrogen. So think about the crazy world we live in today, that you can generate the cost to generate and build a new wind farm or solar farm. It's actually, the capital is cheaper than drilling a new oil well today. So imagine, right? So 80% of some of the wind capacity goes unused because it blows at times when we don't need that energy, or the solar duck curve, which is like that 10-2 when the sun is hottest, highest, and you have the most solar energy generated, but your usage in terms of the availability is high. Availability is high and usage is low. So you have this unused energy. But think about a world where you can take that zero cost energy, that unused energy, and make hydrogen, right? Store the energy as hydrogen, and then time shift those renewables. So now you have it available for when you do need it, right? And that's what we love about hydrocarbons is that nobody decides when you're going to use them, but you, right? You want to get in your car and drive, you can do it whenever you want, right? You don't want somebody telling you, well, geez, Tim, you can only turn the lights on in your house between these hours of the day because that's when we had the wind or that's when we have the sun. That's never going to be our answer, right? You want things that are available when you want them, when you need them, when things make sense to run. And hydrogen changes the paradigm that is renewables. So now when you make hydrogen at the times when renewables go unused, you have the ability to time shift that. You're just storing renewable energy, storing energy for when you want it in the form of hydrogen. And that, to me, is the ultimate value proposition. So now you have clean energy stored for when you need it, right? Because we all know when we go home, right, if you follow the electric grid usage pattern, that 4 p.m.-ish to 8 p.m. is that afternoon, evening peak. People are transitioning from work to home, energy usage goes up, but the sun goes down. Right. So now you've used that sun to produce green hydrogen, and now you're putting that green hydrogen back in the system as energy from 5, 6, 7, 8 o'clock on when it wasn't available before. So now you've just time shifted renewables to make it available then. The reality is, like everything else, there's a ways to go in terms of getting the cost down and building the infrastructure. And infrastructure is the challenge, right? So a lot of things we look at are around what makes sense in a full built out infrastructure. So we are big believers in the hydrogen rainbow. We believe, the idea of blue/turquoise, hydrogen from natural gas, hydrogen from natural gas with carbon capture should be a big part of it. Why do we love H2U? Why do we invest in it? Because one of the biggest problems coming for hydrogen is the machines that make it. So electrolyzers use PIM electrolyzers, which is the dominant electrolyzer right now. They use platinum and iridium as their catalyst. right?
Wow.
So think about that, right? So imagine this world where these electrolyzers are exploding, we're growing, and all of a sudden now we got platinum and iridium prices through the moon. So, I mean, if you think about, right, iridium only exists because an asteroid crashed in the Earth. Well, geez, we don't want to base our next technologies on, an asteroid crashing into the Earth again and making sure there's more of it. So what we love about H2U is they take Earth abundant elements to make catalysts so that you can make hydrogen from things that are plentiful. That's game changing in terms of the cost. And so to us, those are really key points. And when you think about the hydrogen value chain and why some of these things are important, but it's about, you asked the question, hydrogen is expensive, right? Green hydrogen is still expensive. It's not transportable yet in a cost-effective manner, but we'll get there. Things take time, right? I mean, the natural gas pipeline, the oil distribution system, they weren't built overnight. They were built over, 150 years. Think about how fast we made solar cost competitive, right? That's what makes technology so amazing. You think about it, right? It's been 25 years and solar is beating oil and gas in terms of cost competitiveness.
Right.
That's amazing, right? So just give it a chance. And in every case, it's a public-private partnership. And for the first time in my lifetime, the thing that I see that's, so fascinating is that you have the entire Western world, US, Canada, Europe, all pushing in the same direction, right? All pushing for a cleaner energy source. And, when you have that kind of momentum, you have the investor community, you have the regulatory community, you have the consumers, and you have the users all pushing to deliver cleaner energy sources. I mean, when gasoline became the fuel du jour for the internal combustion engine in 1875, they knew then that this was not a good solution for the environment, but we chose not to charge for it. So we've gone 150 years without charging for it. It's not free. So, I mean, at the end of the day, carbon and greenhouse gas emissions were never free. We just chose to kick the can down the road. And now we're realizing that we need to do things in a more, thoughtful, environmentally conscious manner. And we get there. We'll get there. And I think that that'll all come in time. I just think that what you're seeing now is people realizing that hydrogen is a really important part of this energy transition.
Didn't I just see, I think it was just a couple of days ago that I think it was the SEC. Is it the SEC that's going to start or they're trying to implement a thing where they're requiring companies report their carbon footprint? I mean, it's like they're really trying to clamp down on, and if that's the case, in your steam boilers.
I mean, we see it all the time, right? We have, I think one of the things that people don't realize is we have this incredible roster of shareholders that have been with us since the beginning, right? So you think about one of our largest shareholders is the CEO of DuPont, right? One of the largest chemical companies in the world, industrial chemical companies in the world. Listen to their earnings calls. Listen to any Fortune 500 earning call. Over half the questions are about their ESG policies. How are they going to reduce their emissions? What's your bridge to net zero? When will you get to net zero? What will you do to get to net zero? This is the driving force, and it is because what you're seeing is that you're seeing a shifting of the guard. The people who write policy behind the scenes, the people who are analysts who ask those questions, they're people who are going to be in this environment for a long time to come, and they want it to be cleaner. They don't want to leave a world behind that is dirty and the air is toxic. And you're seeing it every day, right? Ask any of those CEOs, it's what they get. That's what concerns them the most is sort of how they manage through this. And still, because it's a balance, Tim. There's nobody who wants to say to their shareholders, good news, we're zero emission company. Bad news, we don't make any money. Right? It's not a good message. But you're seeing that balance play out now where people are moving in that direction to deliver both to their stakeholders, delivering cleaner and more thoughtful solutions, but also being conscious of still trying to deliver a profit for their shareholders. But the SEC is, this is a big initiative. Look, the Biden administration is pushing hard on cleaner energy, and $100+ oil only accelerates people's need to get those sources in the marketplace so that we can drive down costs.
I'm glad you brought that up, $100 oil, because here's something, and you guys really haven't advertised it or mentioned it, but you guys still have oil assets.
We do. We do still have our oil and gas assets. When oil prices went negative, less than 2 years ago, that was in the oil and gas business, that was a seminal moment. You either got out of the business or you figured out how to do things in a much more cost-effective manner. And we did the latter. Didn't do a whole lot of advertising around it because we went and our investors loved the idea of us building a hydrogen portfolio and getting into the hydrogen space. But we had behind the scenes spent a considerable amount of energy and time and focused on delivering a lower cost barrel, which is hard as a small company, really. There's only so many costs you can bring out. And I think, one of the things that I always think about is, companies are people, right? At the end of the day, they're just people. And what I think makes our team so special is that when we had that event, right, the pandemic hit, prices went negative, demand dried up, we as a company could have gone one of two ways. And I put it to our company. I said, listen, we're going to need to cut costs. That's just the reality of whether oil settles at $5, $10, or $30, we're going to need to reduce costs. So we can do that between myself and our CFO, or we can do it as a team and all take a salary cut. And you saw everybody step up and reduce comp, so that the team could stay together. That just speaks volume of the quality of people that Jericho has on their team. And so we've quietly sort of, in the background have had those assets. And listen, it isn't any secret. Oil's been averaging, $52, $53 for the last 7 years prior to 2022. That's not a great environment. It's not a great environment. It's not a place where you're gonna make a lot of money. So from our perspective, we've done everything to keep those costs down, but also at the same time, really build out and focus on the energy transition. And we think we're perfectly positioned for today's world. We have our legacy oil and gas assets, which are now, generating and throwing off enormous cash flow. And on the other side,
is the oil hedged? Do you guys have a hedge on the oil?
We are completely unhedged. So we are fully exposed to $114 oil. Right. And so our assets are in Oklahoma. So the nice thing about, Oklahoma and Cushing pricing is you're about $1.25, $1.50 off of WTI. So really nice pricing. So no big discounts.
And how many barrels do you guys pump out?
So we're doing about 100 for gross revenue. We do about 400 plus a day, DOE. We've been turning on wells now, moving back into turning on wells and adding to that production profile. But we think our portfolio is perfectly positioned for this transition because high oil prices push people to go forward and public policy to go forward with this energy transition, which we are loving and think is going to be amazingly profitable for our hydrogen business. And at the same time, these high oil prices deliver, cash flow. So,
which is a beautiful thing. And let's just talk about, Brian, let me ask you what your thoughts are on this. With everything that's happening in Russia and Ukraine, and I'm certainly not a warmonger, I think what's happening over there is absolutely terrible. And I wish it wasn't happening, but it is. And in my view, I don't think that, let's say this thing ends, next week and Russia takes over Ukraine. I don't see the global, I don't see the world embracing Russia again and buying oil and gas from them. That's just my view. What are your thoughts? Somebody from the industry, do you think we're going to see high oil prices for some time to come?
So I think there's, oil prices are a tricky thing, right? Because with, the passing of the Dodd-Frank Act, the trading of oil got real thin. The reality is that oil also used to have, you could argue whether it was $5, $10, $2, but there was a political risk price built into the barrel. That went away because really political risk was a non-event for quite some time now. And I think people are now waking up and realizing that the political risk associated with the barrel of oil is real. It does exist, and it's not it's not an event that you can predict when and where, but it always happens. So I think you're going to see that stick to the barrel for some time to come. But I think your sentiment is right, Tim. Nobody wants to see what's happening continue. Nobody wants to see people being killed and countries being taken over like this. It's awful to see, but I think it's going to resonate and sit in people's mind for some time to come, where there's not going to be any great rush to go back and buy oil and gas from Russia.
Right. So, I mean, that, and, you know, what we've done here in the States, you know, curtailing fracking programs, you know, increasing the red tape for oil companies. You know far better than I do. I mean, what else has our politicians done to make it more difficult for us to explore and find oil? Because in my view, we're not going all electric with vehicles till maybe 2050 in my mind, right? Because we're not even equipped to handle that. I don't think our grid could handle it. If everybody had an electric vehicle tomorrow, would it be able to handle that? I don't think it would. So with that in mind, the fact that, and I'm pretty sure there's a lot of products that are made with oil as well. I mean, it's not just the vehicles, but it's there's a lot of products that use oil.
Sure. All the plastics, all the resins, all of those things are oil based. I mean, look, the government is pushing hard, and they've put $9.5 billion out there now on this clean energy mandate. So, the edict is clear. We need more energy sources, cleaner energy sources, and we think that this is only going to benefit hydrogen and push the acceleration. Permitting processes have gotten longer for hydrocarbons. If you're on federal lands, you now have a much longer administrative process to get your drilling permit approved. The list of things that are endangered species, that prevent you from drilling wells has suddenly increased. So we're seeing all these things put in place that aren't helpful to expanding the domestic oil production levels.
So you told me you gave me an example of the endangered species prior to our jumping on this little interview here, but what was it again?
So there's a little beetle called the Borrowing Beetle, and the Borrowing Beetle was on the endangered species list years ago. It came off a few years ago, and all of a sudden it went back on the endangered species list. And so what makes it particularly challenging is this little beetle, you cannot drill if your well site is the beetle's habitat, and you need to perform all these studies to prove that it is, but you can only perform those studies twice a year. And if you miss the window and you do the study and your application doesn't get approved, then you need to do a new study. So it's like a circular mess to try and get a well drilled when you have a beetle or some other endangered insect habitat in your line of sight there. So, yes, nobody's telling you can't drill a well, but the red tape to get the well drilled is just getting harder and harder.
So, I mean, I don't know. I don't know what is going to, I think that the fact that this is all happening, I mean, I'm an optimistic person by nature, and I always think that there is something positive that comes from, I mean, it may be bad now or you view it, but typically I try to find the positives that come from things. And COVID, I think shined a light on our dependence on, as CEOs, if you haven't reevaluated your supply chain after COVID, you probably shouldn't be a CEO anymore, right? Because we should, maybe you should be thinking about having things built right here in the US and not be so 100% reliant on these parts from foreign countries. And that's happening. I mean, I'm seeing, Intel's building a chip plant in Ohio, right? You've got Samsung building a chip plant in Texas. I mean, these are big events that nobody's really paying attention to. But I think now with this, catastrophe that's happening with Russia, that's shining a big, bold light on energy independence, right? And yes, renewables, I understand, I get it. Everybody wants cleaner energy.
Mhm.
The bottom line is we're not there. We don't have the infrastructure built out, and it's going to take a long time to do, right? Steel, you and I talked about steel plants. We had a very interesting conversation about the pipe that's used to drill, because you're drilling down 2 miles into the earth, right?
Yeah, there's a steel shortage as it relates to oil and gas. Evidently, quite a bit of the tubulars came out of the Ukraine. Ukraine is one of the last places that they were making tubulars for oil and gas wells, and so it's made it for scarce supply on the oil and gas side, and that's something that we have seen out in the field, where your pricing has doubled, tripled if you can get it at all, and you're ordering it in bulk and hoping that it actually arrives, and you're prepaying in some cases to get them.
And you could get China pipe.
Yeah, I mean that's everybody who operates oil and gas assets knows that that's a tricky bag there. If you care about the integrity of your pipe. I mean, in our mind, this is a great world for Jericho in the sense that we have oil assets that underpin us with cash flow, and we have tomorrow's energy portfolio in our hydrogen endeavors. So, we get the opportunity to live the transition. And from our investor standpoint, it's presented the perfect world. It's presented the perfect scenario for us, where we have high oil prices and we have, this amazing portfolio that will only continue to build and dig in deeper with, because we believe that hydrogen storage is a key piece. We believe in that there is a significant lack of hydrogen production. Right. So we see those as key pieces. So, I mean, those are things to come, the things that we will look to add to the portfolio. Do you have, on your radar, are you looking at, I know you've got investments in each one of these. Mm-hmm. Are there others that are on the radar that, you're looking at and thinking this could be an opportunity for a nice tuck in? So you're going to see us dig in deep on storage and production. That is really sort of two areas that will be a focal point for us for 2022. Really sort of, because think about what we have with traditional energy. And this is where the skill set of our team makes us different, right? Our roots make us understand and allow us to understand the energy delivery, energy usage, and transportation part of it, right? So think about storage, right? So we were talking earlier about renewables and the ability to store them, and hydrogen is that vehicle to store them. Right now you have compressed gas and you have cryo or liquid hydrogen. Both are fairly expensive, and compressed gas is just not that efficient right now. We think that there's more coming, right? We think there's better solutions coming. We think that there's utility scale, infrastructure scale solutions coming. And so we think they're going to be a key piece of the hydrogen story, and we want to be a part of those. And the other piece is expansion of hydrogen production. Right. I mean, hydrogen is produced from a green perspective, mostly from electrolyzers, but a lot of the electrolyzer technologies are just, they're dated, and the electrolyzer companies are running full out just to meet demand. So, I mean, in our mind, there's a huge gap between supply and availability and what's coming. So we want to be a big part of the production and a big part of the storage on the hydrogen side.
So I heard you on another interview talking about, and I didn't even know this, but there is a gray hydrogen, a blue hydrogen, and a green hydrogen. Can you explain the difference in the three?
Sure. So gray hydrogen is hydrogen, essentially that still has emissions, right? Your hydrocarbon-based hydrogen. And it's been around forever, and it's by far and away represents 95% plus of the hydrogen that's produced today. So, when hydrogen is produced today, it's through steam methane reforming, which is a hydrocarbon-based production method, and it has emissions, right? So you have methane emissions that come with that.
Okay.
Your blue hydrogen is cracking the natural gas molecule. Now they call it turquoise if you're able to capture the carbon, right? So if you take that CH4 molecule, which is natural gas, split it into its parts, now I have my carbon, now I have my hydrogen. Well, if I can capture, sequester, or store this carbon, and then move on and use the hydrogen, that's now considered what they call turquoise hydrogen, because you've now captured and you have no emission. So still coming from natural gas, right? So you still have to produce the natural gas, but you've now captured the carbon instead of emitting into the atmosphere. And then the ultimate is green hydrogen, where you're using solar or wind or renewables to power an electrolyzer, and an electrolyzer splits the water molecule H2O. So it splits it into its molecules of hydrogen and oxygen.
And which one is it? Is it supercritical or the H2U that's got the electrolyzer?
So supercritical. And this is you talk about sort of amazing technologies. They are taking the water molecule and they're not converting it into the hydrogen oxygen molecules until it reaches supercritical state. So in other words, it's in that gaseous liquid state. So it's easier to pull the bonds apart. So they're a way more efficient electrolyzer. And they deliver 200 bar pressure hydrogen. So big issue in the market is, pressure, right? Storage, liquefaction always requires compression, which costs money because it's energy intensive. Supercritical has a solution in their electrolyzer design that actually delivers hydrogen at 200 bar. 200 bar is the exact pressure you need to store it. So you eliminate the cost of storage. Game-changing piece of the puzzle, right? You've eliminated a compression piece of it. So you've eliminated a huge energy intensive component in the hydrogen value chain with that solution. So we think you're going to see amazing things, particularly in the ammonia and green ammonia world with supercritical. Great company, great team, and one of the things you'll see is we love backers, right? So we have supercritical. We did that with lower carbon, same people who founded Twitter, same people who founded Instagram, well-known VC firm, and then Anglo American, largest mining company in the world, one of the largest mining companies in the world. They see the opportunity. They see the opportunity for hydrogen. They're big players in it because they need remote energy. There's no grid, right? Where we operate our mines, there's no grid, right? So they love hydrogen-powered vehicles, fuel cell-powered vehicles. Love the idea. Hydrogen, just like its predecessors of the hydrocarbons, is available remotely. Doesn't need to be connected to anything. So huge play in the mining space for hydrogen in the long term, and something that we think will be a big part of what we do at Jericho.
Okay. I mean, I think you're absolutely right. I think that I don't think a lot of people know who Jericho is.
No.
I think if they did take a look at you and they say, okay, hydrogen, probably, if they've been paying attention to the energy space, they probably would think, okay, hydrogen is too costly, but those things are changing, right? And if you're not doing your due diligence, if you're not looking into this, so you've currently now got, how many is it? Five industries? 3?
Yes, we have 5 industries. So we have 5 site studies, 5 feasibility studies underway. At global
and how long
corporations.
are those studies supposed to last?
So the studies typically take anywhere from 6 to 12 weeks. Just depends on where the site is and depends on the need, right? So are we designing it for a production system that's going to run 24/7? Are we designing it for heat and hot water? But we haven't talked about that, but heat and hot water, district heating, holy grail for our boiler. Imagine if you could take all of the heat and hot water systems in North America, okay, and you were able to convert them over to clean steam. Instead of using natural gas, bunker fuel, heating oil, propane, right, to generate your heat and hot water. We have universities, we have facilities managers now, inquiring about participating in our clean steam district heating program. So we are building out a solution all about delivering clean steam for district heating and hot water.
How many of these are actually, so are they built? Are these things running?
Yeah, so we do. So We have a full-scale demo scale model, life-size model, I guess you call it, out in California. Anyone can come see it, schedule a demo, have you out, you can blow the steam whistle. It's amazing to see, how efficient the system is, how it controls the heat, the transition to a chemical reaction, and no emissions. Right? Imagine you have a facility with no smokestack. Right? So nothing going in the air, no air coming into the system, no air going out. We are building the second generation systems actually in the UK now. So we expect to deliver the first ones to market by the end of the year. It's having steel sourcing issues again, but we'll get past those.
So the 5 that you're going to be doing, none of them are actually running right now. But okay, and you're delivering
the fall, late fall, early winter this year, fourth quarter.
Okay.
So we're trying. I mean, the supply chain, you talked about a little bit. The supply chain things are real. Steel is a real problem in the marketplace, particularly stainless steel. So, I mean, we're doing everything we can to source what we need. And what we're going to do is more than likely pre-build units now so that we have them ready to go and they will be off the shelf, because we are only going to offer 2 sizes, a 3,000 and 6,000. It's a 3,000 pounds of steam, 6,000 pounds of steam. That's sort of the focal point of us so that we stay perfect. I don't want anything. I don't want to do one-offs. I don't want to build solutions that are custom made. I want to do what we do and do it really well and stay within our lane. We do a 3,000 and a 6,000.
And that way, I mean, that doesn't limit anybody, because as you said, you could buy 5 units, right?
That's right. Mm-hmm.
So you're not limiting, you just have a very refined manufacturing process. So you're not having to do all these crazy one-off deals, right? You're just.
Yep. No, and I see us evolving to a model where we sell steam as a service, right? So hydrogen and steam as a service. So you just buy it per pound, per kilogram from us, and we'll take care of everything else. I mean, I think that's going to be the evolution of the model, a really nice long-term recurring revenue model, as we stack customers and units.
I love recurring revenue models. All right, listen, Brian, I'm trying to think. Oh yeah, I want to get into some of the let's get into some of the financials here. So how many shares do you have outstanding, fully diluted?
So fully diluted, let me just look at my paper here. Shares issued and outstanding. You're looking at about 250 million, round number.
Okay, 250 million. And revenues over the last several years, you've seen a steep revenue decline, but a lot of that has been because of A, the price of oil, and B, you're investing activities into getting into your hydrogen portfolio, right?
That's right. I mean, oil prices, look, I mean, we talked about at the beginning, oil prices have been horrific. 7 years at, average price of $50. And in several of those instances, it doesn't really matter how good of a team you are, manager you are. Nobody saw the pandemic coming, and nobody could pivot fast enough to make that a good event. I mean, it was a disastrous event for most. So, I mean, it's been a hard, we've been conservative, we've been thoughtful, and we've stayed afloat, but it's not been a profitable experience at that price for this duration.
Right. Now,
but, so this year, oil and gas. So, I mean, oil and gas will still dominate our revenue profile because our hydrogen revenue won't start kicking in our minds till 2023 in real force. And we think, that'll scale as we start to get successful deployments. The key, Tim, is going to be, do people like 3 months, 6 months, 9 months of test run time with the boiler systems, right? Do they want to try it for 3 months before they put in an order for the next one? But you have to remember something. If everybody is going to get to their 2030 goals, you can't start in 2028 or 2029, right? You're making capital decisions today. And what's fascinating is people don't realize that, when you have a world where the regulatory body, the investor bodies are all pushing you in that direction, it's happening. Look at California. You can't build a building in California after 2025 that has any hydrocarbon-based fuel systems. So full stop. So if you're going to plan a building, because that's when you're doing right now, if you're going to build a building in 2025, this is the time when you're putting the plans together. This is when the architects are putting it together so that they can deliver it from a development perspective, get the permits, get it all moving, get it financed and all those things. None of the things that they're designing today have hydrocarbon-based systems in them. Full stop, right? On April 1st, Canada is upping its carbon tax. It's not backing off. That's my point, is that the public side of this isn't backing off. The public side is pushing forward with these additional taxes, and they're going to force the change, right? I mean, if you think about what's forced, changes before, it's always high prices.
So, I mean, that's a lot. Let me ask you a question. Your boilers, they've meet all safety regulations, and have they been tested? I mean, is there any special life, or I guess
so that's an interesting thing. I mean, we think that there's going to be more. So as every industry develops, we think that more regs will come, more safety, but so safety is really important. Everything is tested at the facilities, right? We're running new burner tests again next month on our system. It'll be tested for hundreds and hundreds of hours before any of them leave the production and manufacturing facility. So from our perspective, everything we're doing, we're compliant all the way across North America, the UK. But the safety standards, will evolve, right? And as people learn more about these fully baked hydrogen systems, we'll add them, and we'll, find ourselves in compliance with those. So for us, it's just a function of staying abreast of what the safety regs and as they evolve and change. New industry, new regs, but everything that's out there today, we are compliant with.
So on the boilers, the test programs, the pilot programs, how much is it? I mean, on average, you don't have to give me an exact number, but on average, what do these things cost for you to manufacture and install? I mean, what is the?
So, you're looking at, round numbers of, $1 million per unit.
Okay. And are they paying for that as the test pilot, or not paying for that?
So, if early adopters get the benefit of the public support, right? So we hired an amazing chief commercial officer just last month, Dean Morton. And Dean is one of the best I've ever seen at getting public support and public grants. So early adopters get the benefit of that, right? They get that public support, whether it's in grants, free loans, forgiveness loans, all kinds of structures, right? Off-peak power to run the electrolyzer, all kinds of structures that the government will put in place in a given district, in a given region, to facilitate the transition. It happens in every industry, and it's happening in hydrogen, and it's happening in sort of the energy transition. So, everybody who is in our program is working with Dean and his team on the grant funding to subsidize the delivery, because we want to get to scale, Tim, right? At the end of the day, we know that costs will come down when we're not building them one-off, right? As we build them in 20, 50, 100 batches, obviously you're going to be able to wring out, 50+% of those costs. Value engineering comes with that, installations. So we think each generation, each iteration, you'll see those costs start to come down.
Okay. Real quickly, what do you see as? So you just identified the fact that you're going to have, probably installations and these running towards the end of the year, right? Fourth quarter. Anything else that you see as potential catalysts within the next 6 to 12 months for the company?
Well, I think there's a couple catalysts that I foresee coming. One is that this newfound revenue source that from our oil and gas assets that we hadn't really sort of talked about or had on the front burner for some time. The second thing I think you'll see from the company is we will be aggressive, both on the organic growth side and the inorganic growth side. So, the thing that people don't realize is we've added some amazing technical expertise to our team. So, look for us to really dig in, as I said, on the hydrogen production side, because we see that as being a catalyst event for Jericho as we go forward.
You guys have a investor alert service that they can sign up for on your site, right?
They do. That's right.
Okay. And then real quickly, I just want to talk about the stock, the actual technical setup for the stock. And it's what's really sad but kind of funny is that when you and I spoke last week, we kind of went through and I said, this is a big spot that you guys are sitting at going back to 2017. That's like acting as potential support. And this would be a really interesting area to jump in. If we would have had this interview then, I would have looked like a absolute genius because the stock has done nothing but go up since I have talked with you. So not necessarily super happy about that because I tried to get a starter position and it didn't happen. So when a stock has a move like this, it's difficult for me to want to chase it. But look, I think the story is very clear. You guys are also doing an investor day later today, aren't you?
At the close, we are doing an investor webinar right at the close. I think 4:05 today. So
right,
yeah,
so now
your timing is good.
Everybody and their brother is gonna get this information from the company, and that's great.
I mean, I would say this, from our perspective, we think the best is still to come, right? Like we think we have so many more catalysts coming down the road, so many good things coming. For the first time, we got a little wind in our sail on the hydrocarbon side, and we're full steam ahead on the hydrogen side. So from our perspective, we're perfectly positioned for this world, for right here, for this market. So just so excited about the opportunity and the things to come for Jericho for 2022.
Insider participation, Brian, is there a lot of insider participation in terms of buying in the open market?
So typically not in buying in the open market, but what you typically have is we have a very unique shareholder base. We have this amazing group of families that have been supportive of us for years. Whether it's the CEO DuPont's family, the CEO or the chairman of CBS's family. We have 5 families who've been so supportive of us, and they tend to be the drivers. They participate in all of our financings when we raise capital, and have been real.
You just did a capital raise, right? Not long ago for $5 million, I think it was.
Yeah.
And what was that priced at?
So that was a convertible, a 70-cent convertible. So 70 Canadian cents. So obviously lots of incentive to see the stock go above 70 cents Canadian.
Okay.
And a lot of belief that it's going to go above 70 cents Canadian. And you're talking to people that probably hold 70% of our stock in those 5 families.
So let me ask you a question. Is there at some point plans to uplist to a senior exchange and get out of OTC hell?
100%. And so one of the things we balance is cost. Cost matters, right? When you're building a business that hasn't generated revenue on the hydrogen side yet, you have to be aware of cost. And so one of the things that we're looking at is potentially uplisting to the TSX later in 2022. It's on our radar, and it's something we see as relevant. Coming down the NASDAQ is something we talk about, but it's an expensive proposition. And I think ultimately we need to get a bit bigger before we come down the NASDAQ. But I think that, liquidity will change when we move to the TSX. Look, it's a top 5 exchange in the world. Very easy to trade in just about, every country. So, that's something I would say that is something we'll look to do later this year. Okay.
I mean, NASDAQ, the reason is I just look at the NASDAQ and I think that's where you're going to have a lot of exposure to a lot better funds and institutional ownership, right?
We agree.
But I understand, but I completely understand what you're saying. You don't want to uplist to the NASDAQ just to uplist to the NASDAQ either. right?
Right. I mean, you're $1 million plus in cost to be on there. So from our perspective, and I'm just using a round number that we've been given. I've never actually run that to ground, but that's pretty close to what I hear from most people. And from my perspective, I'd rather use that $1 million to build value for our shareholders, and then go to the NASDAQ when we are, in fact, ready for that and can absorb that kind of cost.
Right. That makes sense.
Not too far down the road, though. I mean, it's a good question and something that's definitely on our radar down the road. So we'll get there. I'd rather own us now, though, before we get there.
No, I believe me, I am so irritated. So I do want to bring this up from a technical standpoint, where you've got some potential resistances right around 48 to 50 cents, and 50 cents, which is funny because it's a psychologically for people, like getting over 50 cents would be like a big thing, right? And then the next level, which will be real big psychological level, would be the dollar, the $1 holler, right? If you can get above $1, then and stay there, that'll be another big milestone for you guys. And actually, you would be taking out this trend line right here. And I think you would be taking out previous resistance. Is $1 the highest you guys have ever been?
I think so. I don't do all the technical things that you do here, but I mean,
yeah,
it had moments in time. You know, did we get
it's
to
the highest you've ever been? So if you took out, let me tell you this: you take out $1 and you stay above $1, you're in what's called blue sky for the technical traders, right?
Right.
There's no resistance overhead,
right.
Which is just blue sky, right? That's your goal, Brian.
All right, I got it. I got my marching orders. That's our goal.
All right, listen, this is I'm going to wrap it up. I want to thank you so much for coming in and doing this. I think it's a great story, and I think people need to put it on their radar. I'm not telling anybody to buy the stock. That's not what I do. I'm not a financial advisor, but I think at these levels, with everything that you have going on, it makes sense to pay close attention to JROOF, right? And if you're interested, go to their website, sign up for their investor relations, get updates whenever they put out a press release, and pay attention to this story, because the environment is right for you guys. Your time is now, right? And you're, like you said, this isn't 10 years down the road, hydrogen, possibly we might have something here. You're going to be
testing. Oh, it's coming. No, it's coming. I mean, I think that, it's going to be here faster than people have realized, because the tipping point is coming. You're seeing rapid build out. I mean, everywhere you look, there's multi-billion-dollar projects, and those are just the underpinnings for what's going to be a very, very big part of the energy complex for a long time to come.
Perfect. If anybody has any questions for Jericho and they want me to reach out, send them, email me. I'll be happy to reach out to Brian and get an answer for you. But I'm telling you, man, keep an eye on this stock. I think it's going to be an interesting one. Brian, thank you. What I'd like to do is maybe, I don't know, a couple of quarters, we do a quarter, we do a little follow-up and just kind of see how things are going.
Sounds great, Tim. This has been great. I really appreciate the time, and thank you for having us on. This is great. You do a great job. We really appreciate it.
I'm gonna stop. Hey there, all you stock market junkies. Thanks for tuning in for another CEO interview here at Alpha Wolf Trading. Today we had Jericho Energy Ventures CEO Brian Williamson, ticker symbol JROOF. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. Why not give us a share? And while you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.